How's it going, guys? It's Ralphie from Beyond the Huddle, and welcome to this week's Bitcoin forecast. As always, we're going to take a look at our smart money accumulation distribution indicator. Then we're going to go ahead and look at our COT to see what the asset managers have been up to this past week, and we'll wrap it up with some price action to give you guys our weekly levels on price and our monthly levels as well. Spoiler alert, though, before we get started, we are actually still seeing the same exact alert in the SMI that tells us that last time this happened, prices actually rallied 73%. So stay tuned for that. We're going to get into very shortly. Okay, guys, so moving on here to the SMI, and for those of you that watched last week's video, you'll be very familiar with this. This is our 90-day 90 days worth of data. Now, normally we wouldn't be looking at this. I'm only going to be looking at a 30-day one of this, but because we talked about it last week, I want to show you guys. And essentially what had happened was we had hit an extreme here in the accumulation for the smart money. And then what we were betting on is that if last time this much accumulation led to a 73% rally, there's a very good chance that this could cause a low as well right around this time. Now, when we last talked about this was on December around the 13th or the 12th, last Monday. So now we get to revisit this data and see kind of how it developed. Okay, now if you guys want to see what this is all about and what the sentiment is and the bullishness and the bearishness, again, go watch last week's video. But essentially it's just the accumulation or the distribution of the smart money in the crypto market. Okay, so fast forward in time, now we can see this one actually came in today, and the long-term sentiment of the market as of 11 o'clock in the morning was bullish. I mean, look at this. It's actually reaching the same extremes that we did back in the 13th, the 15th, and some in the 9th through the 11th, okay? So the key here is, the key takeaway is that between the 15th and the 16th, the market got very frothy. It got ahead of itself. And I remember that the market went up about 5% that day, and everyone was really excited, thinking that the bull market was going to start back up. Well, guess what? The smart money took the liberty to go ahead and distribute positions to dump on you if you give them that chance, and then that led to this drop from about 49K down to about 45K, somewhere around there. Now, there is a big difference during this dump and this dump that happened back here. They both started with distribution, but the difference was that last time the positions that were distributed actually persisted, right? So you can see that during this drop, they actually did not buy, right? So the smart money was not accumulating positions during that moment in time. It actually took a little bit longer for them to rev up their engines and then, feel good about the amount of positions that they wanted to accumulate. On the other hand, this one right here, it briefly went in a distribution, swing high, swing low. That was the premium sell, and we'll take a look at this in price a little bit later. And then it led to a sell-off, right? Now, that sell-off right there actually was instantly met by buying by buying. Okay, so that's really important to understand that this move here dropped longer versus this one, and that could potentially signal the low because of the way that it was created. And right now there's just a lot of accumulating by the smart money. So the same way that this led to a high when it distributed, there was a lot of it. I'm betting it is going to lead to a low. Now the only thing we got to take a look at is how's the COT looking. Are the asset managers still bullish, which we will in just a few minutes. And then the next one would be, what is the price action tools that we have for the executionary time frame doing, right? Are they giving us buy signals as well on the weekly time frame? And how is that all developing? So with that being said, guys, this is, I'm still bullish based on this long-term sentiment indicator. And yeah, so let's move on to the COT, see what that's telling us. All right, welcome to the COT part of this video. Now, of course, before I move on, I want to emphasize the fact that for the sentiment tool of the SMI, that's for the spot market. We're looking at the accumulation and distribution there to gauge the sentiment in the spot market. And now we're going to take a look at the COT, which is the sentiment in the leverage products for the asset managers. Okay, so that's two different types of markets that now we can gauge and understand kind of like what these players are doing. Okay, so one's a spot market, one's a leverage market. So looking at the CME contract here for Bitcoin as of December 14th, we can see that the asset managers, they actually reduced their position by 67 contracts, and they actually to a total of 5,759, and they actually increased their shorts by 60 contracts to a total of 778. Now, usually, guys, a decline in longs for the asset managers and an increase in shorts for the asset managers is something that you don't want to see. But here's the kicker, and this is actually something that I had to learn. And like always, I'm always picking up new things as I study the COT more and more, and I've been studying this for a very, very long time because I used to use it in the I use it in the forex market, and now that I'm applying it here, it's just a matter of getting the hang of how things are done, because there is definitely a difference between the two markets. But the idea here is that a 60 increase or decrease in contracts before, if you would have asked me this a couple months ago, that would have been a large amount of contracts. But nowadays, because the positions have increased so much, I mean, if you tell me that 67 contracts gets taken out of 5,759, that is such a small amount that it just doesn't matter, guys, okay? And to prove this, we want to take a look at the percentages, right? Because when you look at a ratio, it doesn't take into account the actual number, and in that case, you don't have to worry about this thing right here, the open interest. But if you're looking at the actual contract by the number itself, you're going to start to think that's a lot, because you may not have adapted yourself to how things are right now, okay? So right here, we can see that the longs, although they did decline 1% or 0.9% or something like that, it's actually not that bad, okay? We're still above the 80, and that's what we want to do, stay above the 80 to be swing traders and position traders here on Bitcoin. And everything looks fine here for the COT. So let's go take a look at the actual price. At the actual indicator using the TradingView one. So you can see right here for the past 1, 2, 3, 4, 5. So for the past many weeks, this has been above the 80 and even longer above the 60 before that. So everything's looking fine there. You can see right here when we look at the asset manager net position, if you read the title right here, you can see they're still well above the average. Now, if this starts to next few weeks decline and come back below the average, then that would pull the percentage lower, and that's when we have to start to be very careful, because that did not happen back here. You can see right here, last time in September, all the way during this 5x run here in Bitcoin, that was not the case, okay? It stayed above 80 that entire time, and the net position stayed pretty strong until about November. And you can see here that sometimes the net position goes down, but yet the percentage stays strong, okay? And that's why we need both of those, the percentage and the net position, to get a clearer picture on what to expect, okay? So now that we can still stay bullish based on the COT here, in the leverage market, and now we saw the sentiment in the spot market, let's go ahead and move on to see what the prices have been doing based on our weekly and monthly level. Okay, so now that we've gotten the sentiment tools out of the way for both different spot and leverage markets, now it's time to take a look at the price action tools that we use. So basically, as you guys already know, we started the month off below our monthly level right here, and that meant we're supposed to be bearish. So let's go to an 8-hour chart to see it a little bit cleaner. And then we ended up hitting that as a resistance right here, and then we ended up dying, about 30%, and that caused a nice wick right here. So the question became, when we went higher, were we able to stay above the week levels, or did we fail to do so? Now, this is our current week level right here, and you can see that prices are actually, we dipped. So the week started, let's go to a 4-hour so you can see it a little bit better. The week started right here. You see the W right there. So the week started, we moved lower, used the 3-day open as support, and now we're trying to challenge that weekly demand. We'll take a look at that in just a second if you guys don't remember. And now we're trying to challenge this week level right here, okay? So that's last week's level, and we want to make sure we definitely cross above this, because if we can't, again, you guys already know you guys already know the routine, you know the drill. If we cannot stay above this, then we're in a lot of trouble, not just on Bitcoin, but in all the crosses, because then that would signal that we're going to try to challenge this quarterly open. Now, why do I suspect that this quarterly open should, sort of get respected? Well, that's our discount level right here, okay? And if you guys take a look at that, you can see right there, that's your discount zone. right to the quarterly open. And if we go back in time to September, let's zoom in here. That's kind of what happened. Okay, back then we basically, we pulled away that first initial one. It's most of the time a fake one. Okay, if it can't break the resistance level. So there was a resistance level here, and that's the same exact thing that happened here. We had that 52,000 resistance, and then this was our week low at that moment in time, so we just were never able to break 52K. So because it never was able to do so, we went ahead and went back. We tested it once. That's your discount level, so let's draw that out. And again, I want to look at the similarities back to September, because that's the same exact amount of accumulation that the smart money is seeing, as you guys saw earlier in the video using the SMI, right? So we hit it once here, twice here, 3 and 4 times. Now, remember, looking at it this time, we actually just missed it here. We hit it here once, twice, 3 times, 4 times. So the question is, can we finally get a strong weekly reversal, right? Going above our weekly level. And then move higher. Now, here's the problem, guys. Unlike back in September, if I remember correctly, we were also going above our monthly level. The problem is, here in December, it's the 20th, so there's still 10 more days left of the month, and we're well below our monthly level right here, right? So even if we do get above our weekly, that makes us short-term bullish based on the weekly candle, right? So if I go to my weekly candles, that would make this weekly candle bullish, but then we would still be bearish on this monthly candle. So the question you got to ask yourself is, can we break these important resistance levels after we break the weekly? That'd be a 10% move to the first level at 52K, and then that would be a 20% move higher back to the monthly. Now, that would absolutely skyrocket the altcoins, because we are pretty bullish altcoins. We do think that they should outperform Bitcoin. So it'll be very interesting if it'll kind of do, I don't know if you guys remember what happened here back in May, so April, May. I did not partake into this move because I was still bearish Bitcoin. If anything, if you guys remember, we sold, again, I don't sell, but I was looking to be bearish at this supply zone, and that was also the quarterly open being used as resistance right there. But yeah, if you guys remember this, when Bitcoin bounced right here, so Bitcoin bounced about, what, 25, 27%, Ethereum actually went on like a 120% run, and a lot of the altcoins just went insane, okay? So we gotta be careful and watch out for that it's not another fake move in the altcoins, and then, Bitcoin is just retracing back into this move right here for some sort of a resistance retest right here, and then dump again. And again, the reason why that's so important is because we're still below our monthly level, okay? If we weren't below our monthly level, then I wouldn't feel this way about it. But again, in 10 days, it'll change again. So we'll have to keep an eye on how that develops. So yeah, guys, there you have it. That's our analysis. Again, we're short-term bullish based on the SMI, our sentiment in the spot market. We're definitely long-term bullish, based on the COT, and then we're also bullish based on how we can close around this this level right here. Okay, so with that being said, guys, I'll see you next week. Make sure you guys tune in tomorrow to see our altcoin analysis and how that's gonna go. And remember, Misha also touches up on what Bitcoin has been up to. It's just one day, but who knows, maybe it'll change drastically in 24 hours time. And yeah, with that being said, I'll see you guys next week. And oh, by the way, Merry Christmas, Happy Hanukkah, Happy Holidays, whatever it may be that you guys celebrate, because I actually won't talk to you guys until next week, and by then it'll be the holidays. So take care, be safe, and peace.